Stuart Nash.
Thank you very much, Mr. Chair. There are a couple of things that I would like to elaborate on and just go back to a clause that I was talking about before. This is the liability of conveyancers and reasonable reliance. And this is, we're talking about Part 2, Clause 44, 6B, and I'll quote this here: a paying agent is not liable for a penalty under Part 9 of the Tax Administration Act for a failure described in subsection 6B. What we're basically saying here is that even though the lawyer or the conveyancing agent is in fact responsible for paying the tax, they're not liable if their client has not given them the information required to make to make the payment of that tax. I suppose what I'm saying here is what we are requiring overseas investors to do is provide their conveyancing agent with the correct information that allows the collection of this tax. And there was a little bit of concern in the Select Committee around how this would play out and what would happen if an overseas investor knowingly or negligently gave false information, because it is quite hard tracking down people who live overseas, who aren't part of this jurisdiction, and often a part of a jurisdiction which is completely foreign to the vast majority of New Zealanders, and some of them we don't even have tax agreements with. And so we are relying, in fact, on the honesty of the overseas speculator, the overseas investor, I should say. There's something, one thing that I would like to talk about, and we should actually, I suppose, understand when the residential land withholding tax will apply. That's quite an important part of the bill. It will apply when the property being sold is residential land. And again, we talked about what constitutes residential land, but the definitions are in the Act. And is defined for the purpose of the Bright Line test. And this is one of the bills we talked about earlier. This is the tax bill that gives effect to the Bright Line test. And this is when the vendor and the seller acquired the property. Now, this is the important thing: on or after the 1st of October 2015. So any land bought before the 1st of October 2015 is actually not subject to this. So if an overseas speculator has bought something on the 29th of September, they can hold that for a year, 2015. They can hold it for a year. They can hold it for any amount of time and avoid paying this tax at all. And of course, the vendor is an offshore person. Now, the other thing that's quite important, I suppose, is how much does the person have to pay? Well, what will be required to be withheld, and there is a difference between what is withheld and what is paid, is it's 33% or 28% if the vendor is a company, times the current purchase price minus the vendor's acquisition cost. So your stock standard, so for example, if someone buys a house for, an offshore person buys a house for $100,000, they sell it a year later for $150,000, that's a $50,000 profit. If they're a company, then they have to pay $14,000 as resident land withholding tax, but they still bank $36,000. There's still quite a lot of money there that's in the account. Or I should say, the lower of 33% or 28% if it's a company, and 10% times the current purchase price. So there are two equations in there that need to be met to ensure that it is very difficult to avoid paying your full amount. But let's go back to the amount of money that speculators still can make here. So if you buy a house for $100,000, a speculator sells for $150,000 within that 2-year period. If they're a company or a trust, they pay $14,000 in tax. They still bank $36,000. If they're an individual, on the top tax rate, then they withhold $16,500. They still bank $33,000. It's still quite a lot of money. But the interesting thing is there is a clause in the bill that says that the resident land withholding tax will be paid before other disbursements are made at the time of settlement. There was a concern by real estate agents that perhaps they wouldn't get their commission. We assured them that, in fact, no, they would get their commission. That was sacrosanct, so the real estate agents were quite happy about that. But if the vendor's conveyancing agent is required to pay the resident land withholding tax, this will be paid after the amount required to discharge the vendor's New Zealand mortgage has been paid. But the interesting thing is, if this would result in an insufficient funds being available to pay the mortgage, then the amount of resident land withholding tax would be restricted to the difference between the current purchase price and the amount required to discharge the New Zealand mortgage.
Jamie Lee Ross.
Thank you.